Alright everyone, now that we have covered all the event details, let's get into the financial side of things. Naim, you have been handling the number for a while, so could you explain how our income is treated for tax purpose, especially the difference between income from members and non-members?
Definitely. So as a club, we are not a business. We exist to serve our members and offer social, recreational and sport activities. The Income Tax Act 1987 provides some clarity on how we should handle income. According to Section 53A of the Act, income from members is exempt from tax under the principle of mutuality. This means that the income we receive from members, like membership fees or subscription, is not treated as a taxable income. The government doesn't view it as a profit because it's not for personal gain. It's simply members contributing to the club's activities.
So, if I pay my membership fees, that means the club does not pay any tax on that?
That's right. Your membership fee is not considered taxable income for the club because it's a contribution from one member to another member, essentially for mutual benefit. This is the core idea behind the principle of mutuality. It says that a club cannot make a profit from trading with its own member.
Exactly, Naim. So, things like entrance fee for our event, subscription and any service or goods sold to members are exempt from tax. The important thing is that this transaction must only involve members. Once we start dealing with non-members, the tax rules change.
This is where it gets a bit more complicated. If we have a fundraising event or any event open to the public where non-members are involved, the principle of mutuality doesn't apply anymore. Any income we receive from members like ticket sales and donation become taxable.
Exactly, Zahid. For example, if we organize a charity dinner and sell tickets to the public, the revenue from those ticket sales will be considered business income and will be taxed under Section 4 of the Income Tax Act, which deals with income from businesses. Similarly, any rental income from non-members, for example, renting our hall or facilities, is subject to tax. This is explicitly stated under Section 30 of the Income Tax Act, which cover rental income for clubs and societies.
So, anything we earn from non-member, whether it's event ticket sale for rental or something else, can we get taxed?
Correct, Iman. And we need to make sure we track those separately. The club's record need to distinguish between income from members and income from non-members. Under Section 33, clubs are required to maintain separate account for transaction with members and non-members. This ensures we are not accidentally taxing income that's supposed to be exempt.
This is why we need to be careful. For example, if you run a cafe in the club or having vending machine, the income we earn from non-members like students from other clubs or faculty will be taxed. But if only our members are buying the foods or drinks, then that's not taxable.
So, if we host a public event, say a concert or a charity auction, we need to treat the income as taxable. Any revenue from members like the ticket sales or auction proceeds would be subject to tax. We need to keep a accurate record of all such transactions, and those expenses should be accounted for separately.
Oh, I see. Also, it's not just the event income that's taxable, but even things like the cafe or if we sell items to non-members.
Exactly, and when we spend money on things like renting equipment for this event, we need to make sure we are deducting those expenses from the appropriate source of income, whether it's from member or non-members. if we spend money on organizing a public event, we can only offset the cost against the income from the event, not from our membership income.
And let's not forget that we need to comply with the income tax exemption number 2 order 2013, which grant some exemption to organizations affiliated with recognized bodies like sport club affiliated with the Olympic Council of Malaysia. If we were to become such an affiliated organisation, we could apply for exemption on certain incomes related to amateur sports activities as per paragraph 26 of Schedule 6.
So, if we ever become affiliated with the Olympic Council, some of our income might be tax exempt, right?
Yes, but that only apply if we are focused on specific activities like promoting sport. It's a great benefit for sport club, but it doesn't apply to all type of club. It's something to keep in mind if the club ever decide to pursue sport activity more seriously.
Right. So, while we are not a sport club, it's good to know there are specific exemptions if we change direction in the future. But for now, we need to focus on the income from our activities. We need to keep separate account and track all our income and expenses, both for members and non-members.
Okay, so I guess the key takeaway is that we do not pay tax on membership fees or service for member. But anything we earn from outsider, like renting out or hall or selling ticket, will be taxed. We just have to be really careful to separate the two.
Exactly, and that's why it's so important to keep good record. We have to maintain our books for at least 7 years as per Section 82 of the Income Tax Act. That way, we can be sure we are always ready in case of an audit or if the tax authorities need to see our record.
Absolutely, Naim. And don't forget, the tax return need to be submitted by June 30th of the following year. As per Section 77 of the Income Tax, we need to make sure we file on the time to avoid any penalties.
Oh, so it's not just about income from non-member, but also about keeping track of our expense and filling on time.
Exactly. If we are late with our tax filing, we could face fines. The key is staying organized and making sure our accounts are clear and separate. That's why we have Naim keeping track of everything so carefully.
It's a bit of work, but it is manageable as long as we stay on top of it. If anyone ever has questions about any of this, feel free to ask.
It's like learning a new language at first, but once you get the hang of it, it's become a second nature.
Thanks for explaining all of this. I feel much more confident about the financial side of things now.
Glad we could clear everything up. Let's just make sure we keep up with our record, file on time, and keep everything separate. Any other questions?
No, I think that's almost everything. Thanks again.
Anytime.
In this expanded scenario, the student dives deeper into the tax rule surrounding income from member and non-member, referencing specific section of the Income Tax Act 1967 that impact club and societies. They discuss the principle of mutuality under Section 53A, income from non-member being treated as business income, Section 4, the need to keep separate account, Section 33, and exemption for affiliated club, paragraph 26 of Schedule 6. They also emphasize the importance of maintaining record for 7 years, Section 82, and meeting tax filing deadline, Section 77. This detailed explanation helps to understand how the club finance should be managed to stay compliant with the tax law.